If you're an active trader looking to increase the amount of money you trade with, I have urgent news. You can get $5,000 or more for your trading account. The hardest task an active trader has is to manage cash flow. Without using every technique available to earn a profit, you can quickly run out of funds to trade with. That's why Traders Accounting put together an eye-opening, easy-to-understand, 11-part video series about the business of trading. These videos cover what every successful trader needs to know, such as what business a serious trader like you needs, the best way to set up your trading business, wash sales and capital loss restrictions, business expenses you may not have thought of deducting, what mark-to-market is, and efficiently trading your own retirement money. These free videos show you how to get an IRS subsidy of $5,000 or more every year just by trading. It's easy to get our free videos, too. It's quick, easy, and safe, and there's no cost or obligation. Thank you, and we'll see you on the next page.
Good evening, everybody. This is Jeff Gibby. I'll have the pleasure of reading your legal disclaimer today. Thanks for coming out. We've got we've got quite a few people here tonight. Welcome to the Metastock webinar series, and it's good to have you here. So let's go ahead and get started. As you know, for those of you that have been here before, and I know a lot of you have, you're going to have the pleasure of hearing a legal disclaimer. So here we go. Today's demonstration is designed to instruct you on using Metastock software and accompanying plugins. It's not a recommendation to buy or sell exchange-traded instruments, but rather guidelines to interpreting and using specific indicators and features found within the software. The information, software, and techniques presented today should only be used by the investors who are aware of the risk inherent in trading. Thomson Reuters shall have no liability for any investment decisions based on the use of the software, trading strategies, or any information provided in connection with the company. They changed that a little bit on me, and I don't have it quite as memorized as I used to, but needless to say, welcome to tonight's class. It's good to have you here. I don't know if anybody of you heard the last presentation we did with Trace just before the 2012, but I did. I was able to kind of come in and listen and hear what he had to say, and I have to say that I was blown away by what I didn't know about Trace accounting, and so we of course wanted him to come back in, and so hopefully you learned some stuff today. I know last time he talked I sure did. Trace has been with Traders Accounting I don't know how long now, but we're going to go ahead and bring him on and have him talk about taxes and accounting and trading and that kind of stuff. So Trace?
Yes, hello Jeff.
How are you?
Hello. Good, thank you. Thanks for that introduction, and let's get that picture right.
Yeah, go ahead. Now let's go straight to your legal disclaimer, shall we?
Sure.
Trace, welcome to the Metastock classroom again. It's good to have you. I'm going to go ahead and turn the time over and get out of the way, as they say.
Okay. Thanks, Jeff. I appreciate that. I appreciate everyone else being here on the webinar tonight as well. And we as well have a legal disclaimer. We are not a law firm. We are an accounting firm. You will have an opportunity, however, to meet with us on a conference call with your CPA or tax attorney to discuss anything that we talk about tonight. But we generally don't get into those nitty-gritty specifics of everyone's situation, and we'll just kind of give you some information on how you are taxed in the market. Now, why are we always making such a big to-do about tax? Well, it's actually your largest expense. According to a survey by Sandy Bodkins, a former IRS agent, tax attorney, CPA, your largest expense is tax. It is more than food, clothing, and shelter combined. And when you put that into the context of a trading business, you got to realize that when you save $1 on tax, that's actually $1 that's sitting in your account ready to trade. It's your inventory. So if we can save you some tax, that's definitely going to help your trading business. And it's one of those things that I don't expect anybody to become a CPA or a tax attorney in tonight's call, but I'm going to point out the major elements that need to be considered as you develop your trading enterprise, because tax is just as much of an important indicator or just as important as part of your analysis as your fundamentals and as your technical analysis. And you need to realize that on the other side of that trade is somebody trading out of a 401k, somebody trading out of an LLC or a corporation for very specific tax reasons. Here's an example. Here's how I'm going to show you how we can stop the bleeding in your trading accounts. Let's say that you've got a 20-year trading career ahead of you. If you started out your trading enterprise with $1, but you're such a good trader, you were able to double that dollar and get 100% return every single year. If you did that for 20 years, you would double that dollar into over $1 million in 20 years. However, if you do the same trading methodology and do nothing different except get taxed every year, in 20 years, you take that same dollar with the same trading methodology, you don't turn that dollar into $1 million. Rather, your dollar gets turned into just over $22,000. Why? Well, because you're getting taxed every year at 35%. So instead of taking $1 to $2, you go on the first year from $1 to $1.65 because 35% was held out in the form of tax. Second year, $1.65 doubles again, but then we have to pay tax on that. And so it basically eats into the compounding effect that you would otherwise have if you were trading out of a tax-deferred account. This right here, that's a 401k. This right here is an individual trading account. Now, Trace, am I really taxed at 35%? Well, let's look at this. You are taxed on your taxable income, and income tax comes at you not in the form of one or two different types of tax, but actually 3 types of income tax. In other words, whenever you make an income, you're going to be hit with federal income tax, anywhere from 10 to 35%. Those of you lucky enough to live in Wyoming, Nevada, South Dakota, Wyoming, Florida, Texas, you have 0 state income tax. But those of us that live in Oregon, Hawaii, California, that's an 11% state income tax. And then on top of that, you've got the onerous, obnoxious Social Security, Medicare, Medicaid tax. How much is that? 15.3% on your first $100,000. It's actually $106,000, but just remember, your first $100,000 of earned income is going to be hit with FICA tax. Many of you may not notice that because your employer pays half, but when you're self-employed, who's your employer? That's right, yourself. So you end up with 15.3% tax. Now realize that that tax, Social Security tax, is only levied on earned income. That does not apply to unearned income.